What's up, guys? Welcome back to the channel. Thanks for tuning in. Today we're going to talk about the ETH triple halving. All right, so what the pants is the ETH triple halving? All right, guys, so I'm going to explain this to you guys as best I can. Actually, no, I'm going to explain this to you in a way that you guys may understand, may not understand. But guys, this is massive. So we're going to go ahead and explain it to you. Yes, this video is going to be a little bit longer. But again, guys, this is some important stuff. I'll try to shrink it down as much as I can. This report is about 80 pages long or something like that. But we're going to explain a couple pointers, and I'm going to hit on each of them. So the triple halving is pretty huge. So I'm going to explain a couple points, and we'll go ahead and start with the first. First is, now that we are going to a proof of stake, or EIP 1559, let's just go ahead and hit on EIP 1559 because we have D-Day coming up on that now, which is in July. So basically with EIP 1559, if you don't already know, I made a video on it as well, but the base fee, or quote unquote a portion of the transaction, is what you need to know, is going to be burned. So the more the network is used, the more tokens are going to be burned. So when that's burned, that's going to cause the token to be de-inflationary. So Bitcoin is considered hard money. Ethereum would be considered super hard money because now it's de-inflationary. It's actually deflating in supply. So something pretty important to understand. Okay, so that's one part of it. So the reason why it's called a triple halving is because that's going to consider maybe 30%, 40% of it because it's going to be going down. But now you got to factor this in. Now we're going to proof of stake. So right now, even with EIP 1559, the miners still are going to be getting rewards from transaction fees. So what do miners do? Well, they got to pay for expenses. So what do? They dump their ETH. Guys, there's sell pressure right there. But once we go to proof of stake, now you're going to have these miners no longer exist. Now it's going to be stakers. So now these stakers are going to be staking and locking up their Ethereum. There's more, or now there's less sell pressure. Now there's more supply being locked up. Not only is there DeFi, there's staking, and now you're having fees burn. Guys, that's three things right there. Now we're having institutional demand, four things. Guys, look, it's hard to, words can't really explain this. It's just something that's like, guys, we're having a triple halving. This is how you can explain it. This is how you can relate it. Just what the halving does to the Bitcoin is what it's going to do to Ethereum times 3, in my opinion. Again, this is not financial advice, but here's just a quick tweet just so you guys can see this. Here's the tweet. The Bitcoin jump from 6K last year to 60K this year was due to Bitcoin supply dropping by 50% in May 2020. The EIP 1559 is like 3 of these events, implying whatever the ETH price is on July or before, it can jump 9x. Extreme just to illustrate the point on ETH. So July as in coming up in July, jumping 9x. I don't know. Time will tell. We'll see what happens. But guys, that's just a tweet. This is not financial advice. This is just something that is out there. But I'm going to explain the defense on this, and you guys tell me what you think. All right, so I'm going to go over a couple things in this article. I'm going to try to go through it briefly. But the first thing is memes. Guys, if you don't know how massive memes are, just look at Dogecoin. Dogecoin is entirely, it's a useless coin that is a meme. I'm not harping on Doge. I'm not saying it's terrible. What I'm saying is the whole gig of it is a meme. That's the value of the coin. It's a meme. That's what I'm trying to explain to you guys, is Ethereum also is having a meme. The triple halving is more than a meme. It's massive, guys. Just keep this in mind. So this is one thing you guys need to keep in mind with this report that they're talking about as well. A flows-based theory of asset prices. So this explains how classic supply and demand works. When you have an extreme shortage of a supply, prices soar. A good example of this is Rolex. They do this on purpose, and same with diamonds. Yet they can make as many Rolexes as they want, as quick as they want. Believe me, if you're getting 40, 50 grand a watch, I'd be rolling them out like that, man. But they don't. They do that because they understand if they suppress the supply, the demand will always be there. I mean, everyone, they look at a watch. Oh, is it a Rolex? Oh yeah, it's a Rolex. Oh, dude, you're rich, whatever. Well, I mean, it's a Rolex. Great. So here's something you need to keep in mind. With something that has a crazy price pump, there's three things that are involved. It's called the unholy trinity. It's liquidity, volatility, and insolvency. So what that means is when there's really, really low liquidity and there's not enough supply out there, insolvency, you're going to have extreme volatility in both situations. So a lot of people are like, well, that'll put Ethereum at like a crazy market cap if it goes to such high rates. Well, it's not that all that money is going in there. The market cap is, sure, you're measuring it for the whole network, but say you have 100 million in the supply and only 10 million of it is really able to be used or grabbed at. So in theory, your real market cap is going to be on that 10 million supply, because there are some that are locked up in DeFi, they're locked up in staking, that they aren't selling it because that's their livelihood. So there's some people who mine or stake Ethereum in order to pay for their bills and pay for this, pay for that. Well, not stake Ethereum now, but I'm saying in the future, like right now we have miners who just live off Ethereum. It's going to be the same thing in the future as well when people are staking. This is going to be something that feeds their mouths, so they eat. So they're going to be staking the Ethereum. They aren't going to sell their bread. They're going to keep that bread so they can get more butter. I mean, that's just how it works. So that's one of those things where you have to value the market cap on what supply is there. So right now we have a ton locked up in DeFi. We have, what is it? I want to call it like 12 or 13% already locked up for ETH 2.0 that cannot be touched until it launches. So it's something that's like, whoa. And now we're going to have burning. So now less and less supply is going to be out there. So it's one of those things where it's like everything's pointing down on the supply. It's going to be massive, massive shortage. Here's an example of a chart they give. So this is when Tesla was joining the S&P 500. So you can consider this like, okay, maybe this is buy the rumor, sell the news type of thing. So this could be EIP 1559. We don't know, because say it's a little bit different, because in Tesla, some investors could not buy it because it was like, oh, well, we can't buy it because it's not on the S&P. Once it gets on the S&P 500, some of the institutional funds, they buy into the S&P, and that automatically buys into the Tesla, or automatically buys Tesla. Or they go ahead and say, oh, okay, look, this makes Tesla legit. Same thing like with ETFs and whatnot. More institutional investors can get into like a Bitcoin because it's more quote unquote approved, but it's looked higher upon now that more and more investors are getting on. So it's like, oh, you got in Bitcoin? Good job, man. Oh, you did? Oh, okay, you spent 100 billion? Oh, okay, good job. 40 billion? Good job, man. Good for you. So it's like one of those things where it's like, okay, you didn't buy Bitcoin? Dude, you should have bought it. It went up like 10x. It's going to be like, oh, okay, great. So before they're like, you bought Bitcoin? It's rat poison. So it's one of those things to keep in mind. And you guys can see it still popped. Even after being on the S&P 500, it wasn't like buy the rumor, sell the news. This shows that the price is sticky, so supply emerges. They apparently figure out, oh, okay, well, this is what the real price was, and then obviously we had a correction. And I mean, most of the markets had a correction anyways, but just so you guys can keep that concept. So this is another thing to keep in mind as well. Okay, so here's an important chart. I'm not sure if you guys can see it. Let me zoom in for you guys. So you guys can see on this Bitcoin chart, what the yellow addresses mean is the addresses with more than 1,000 Bitcoin. So that's increasing more and more, even when the supply or the price goes up. And why is this important? So even while the addresses are rising, the same amount of wallets that are having more than 1,000 Bitcoins are also rising. So it's that concept of HODL, or hold your coins, don't sell them. So it's going to be taking apart with Ethereum now, because people are going to proof of stake. Now it's like, oh, I hold my coins. But wait, it's more incentivized now. Now it's like, I hold my coins and I stake them and I earn money? Whoa, I'm going to do this. And then Bitcoiners are going to be like, whoa, you can hold your money and stake your coins and earn money? Whoa, I'm going to do that too. And then you'll have people coming over to Ethereum, and then it's like, oh, wow, Bitcoin is like one of those things where it's like the gateway drug. Here's another chart I want to show you guys. All of these things are a part of the triple halving. So look, do you guys see this chart? This is the ETH to BTC ratio. So right now, it's probably about 0.06 right now. But back in the heyday, this was only in 2018. It was actually way more. It was like, it went as high as 0.22. So basically what that means, or 0.20, what that means is 5 Bitcoin bought you 1 Ethereum. Right now, it's 20 Ethereum, or I'm sorry, 5 Ethereum bought you 1 Bitcoin. Now it's 20 Ethereum buys you 1 Bitcoin. So that was back in the heyday. That was when EIP 1559 wasn't out. This is when there's infinite supply. We're getting tons of circulation or tons of supply on the market. It's like, oh, who cares? Miners are dumping on everyone. It's crazy. Poop coin, P coin, and all kinds of coins are coming out, and it's like, whoa. So I mean, we're going to see a time where this flips, or at least retests that. And this is my opinion, guys. This is not financial advice. You guys just do what you want. I'm just explaining to you my thoughts. You guys make your own decision. We already explained this. Capital locked and staking. This is in DeFi, guys, because you stake it in there and earn money. Why wouldn't you? This is the amount of Ethereum already locked in DeFi is 10 million Ethereum. 10 million Ethereum. That's not dollars. That's 10 million Ethereum. So, guys, crazy, crazy stuff. Look at this. The Ethereum supply on exchanges. Let me show you guys this on the Twitter. Look, guys. I'm going to get rid of my face. You guys don't need my face. And meeting for all. All right, so look at this, guys. Up here, we have about 29 million out on exchanges. Now we're down to 21. This was back on in May 8th. Yeah, this is, oh, I'm sorry, not May 8th. That's May 3rd. So May 3rd, guys, 21 million. That's, what is that? From 29 to 21 million, that's a 30% decrease. Guys, that's huge. Huge. Do you know what happens when there's more demand and lower supply? Well, it's called price pumpage. So this is another period in the article where they're talking about Bitcoin is sound money. Ethereum is ultra sound money. So this shows like the ETH transaction fees. So like the more transactions that you have, the more Ethereum that is going to be burned forever. As a result of EIP 1559, 70% of the transaction fees on the Ethereum network will be burned. The supply will be deleted from circulation. The 30% will be delivered to stakers in addition to the regular issuance as further staking. So here's another chart. This is the Ethereum's historical issuance rate. Here's the supply. You guys can see it kind of tapers off. And here is where EIP 1559 comes out. Flatline. Flatline, guys. And now the issuance, flatline. This is after EIP 1559. Actually, in fact, it's going to go negative depending on how the transactions go out. So keep that in mind, guys. So here's an estimation of charts on the motivation for quote-unquote staking. So a lot of people are like, oh, well, the stakers will eventually, once it gets to a certain price, they'll sell. Yeah, sure, they will. But keep this in mind, guys. So if there are only 4.5 million Ethereum staked, and again, guys, now we're having a deflationary supply. Now it's going down. That means there's going to be less and less on the market. This is just saying for 4.5 million ETH. The rewards are going to be 68%. I don't know about you, but I'm locking up my ETH at 4.5 or at 68%. No brainer. At 5 million ETH, we're at 42%. Still, no brainer. 6 million ETH, 25%. No brainer whatsoever. 10 million, 12%. Hey, that's better than stable coins, but seems interesting. 15 million, 7.2%. Well, hey, I'll take it. That's okay gains. And maybe ETH goes up. So 15 million, just consider that's a conservative number. That's something that's like, okay, I'm fine with that. So 15 million ETH, you can just go ahead and call that off the market. That is just being conservative. On top of that, you have protocols, DeFi protocols locking up ETH. You have like Uniswap. In order to provide liquidity, you have to lock up ETH on the other LP side. So it's something that's like you need ETH to fuel the network. Then you have those other people, all these different wallets. They're going to have at least, I'd say 0.25 ETH just to transact with gas fees. So you can already factor that in too. The reason why I considered that is because I think we're at like 100,000 or almost, no, it's like, yeah, it's like 100,000 different wallets. So that alone, I mean, that's 25,000 ETH, but still, that's something, especially with the de-inflationary supply, guys. Here's another thing, guys. Trevor Lawrence, #1 draft round, or #1 pick, draft, whatever you call it. Doesn't matter. Same thing. But look, the present future is ETH hodling. This guy decided to get paid in Bitcoin, ETH, and Solana. Why didn't he just do Bitcoin? His whole paycheck is in Bitcoin, ETH, and Solana. In my opinion, he got Solana because he was partnered with BlockFolio. So it's kind of like, hey, you should get Solana. Or maybe they give it to him for free. I don't know. Solana is interesting. I do like Solana as well. But again, they're sponsored by BlockFolio, so it kind of threw up a red flag for me. So I was like, oh, well, that's maybe why they picked Solana. But again, guys, I'm not saying Solana is bad. I'm just saying it's just marketing. There's nothing wrong with marketing. But he picked Ethereum out of Bitcoin instead of just doing all Bitcoin. So it's kind of like interesting. Maybe he realizes, oh, well, I can stake my Ethereum, earn some money. Their angle is the climate narrative. So Bitcoin, everyone's like, oh, it takes so much. It's so bad on the environment. It's all this garbage, all this, that. Well, Ethereum, now you're just staking these coins. The only thing that you have to do is pay your taxes. That's it. So it's kind of like, okay, well, that's all it is. You're just staking coins. And it's quote unquote better on the environment. So all those people who are like, oh no, it's bad. Really, in my opinion, Bitcoin's not bad for the environment. It's just another use for energy. You can use the energy to mine Bitcoin instead of mining gold. So it's like one of those things. It's a horrible argument, but that's just an example of another scenario where you can go at it. Look at this, guys. Ethereum versus Bitcoin daily transaction volume. It's exponential. Ethereum is just skyrocketing. Ethereum quarterly transaction volume. This is in the billions, guys. Look at this. Skyrocketing. If you guys want to see what Ethereum looks like when it scales, well, it looks like this orange thing. What is this orange thing? This orange thing is Binance Smart Chain, guys. Binance Smart Chain is showing you what Ethereum will be in the future. Except now we have a de-inflationary token. Did you guys see what BNB did? BNB is somewhat de-inflationary. They are burning some of their coins. BNB literally did a, what, 8? No, not 8x. They did like a 20x. It was nuts. Crazy, guys. BNB was like 40 bucks, 30 bucks, and now it's like 680 bucks or 650 bucks. It's one of those things that's like, guys, look, it's coming. Just be ready. So now that we're having institutional investors coming in, this is an important chart to see. I don't know if you guys can see it. I'm going to try to zoom in the best I can. But typically they value companies that are profitable, right? Okay. Well, in year 1, 2021, the net cash flows of Ethereum are going to be $8 billion based on the transaction fees. So what does that value Ethereum at? At 8 billion, that gives it about 2,300 per ETH. And if you guys saw in Q1, you guys can see it was exponential. So in 2022, they're expecting 20 billion in cash flow. So what does that price ETH at? This is with the current market cap, as in like all the supply is out there. So they're valuing it at $16,000 or $16,770. That would be the, I guess you can say, actual value of the network. Now, how many times do people value something in the actual value? Take a good example of Tesla. Is Tesla really, what is it? I think, I don't know, 89? No, it's like 500 times earnings or something. And leave in the comments below if I'm wrong on that. I probably am. I usually am wrong. But guys, people are forward thinking, not forward thinking, but they look in the future. So it's kind of like, okay, well, 16,000 is what the price should be. Now people are going to be overshooting that big time. Is it sustainable? Probably not. But it is still something that's like, hey, look, Ethereum is going to pop. Yes, sure, it'll pop extremely high. Yes, it will retrace as well. But this is something that, in my opinion, we are going to see a massive flippening. Here's a good example. I will give you guys this example so you can understand it. So if I can buy 1,000 ETH and stake at a 25% yield, Justin Drake's best guess, oh man, good name, and a 2% annual share repurchase because the ETH burn, etc., estimate for supply deflation, then my 1,000 ETH produces a pre-tax owner's earning of 270 ETH because that's 25% plus the 2%, 270. So I'm going to sell 40% just to cover my taxes. 39%, guys. Remember you heard about the Biden 39% thing. So I get a tax earning of 162 ETH per year on my 1,000 ETH loan to secure the Ethereum network. Okay, cool. So I'm valuing in ETH denominated terms. So it's not accounted for in ETH USD. So we're going to calculate it now in ETH USD. So as a bond, the interest rate environment with the S&P 500 at an earnings yield of 2.3% and a discount rate of 3%. Seems fair. Yeah, that's fair. This yields 5,400 ETH. That is dollar terms, everything's related. So in relation, what you're getting is yielding 5,400 ETH. So in other words, one staked Ether is worth 5.4 staked ETH. The reason why I say that is because 1,000 divided by 5,400 divided by 1,000 is going to give you 5.4 ETH. So what does that mean? Well, staking Ethereum unlocks more than 5 times the value of Ether. So when people are buying cryptocurrencies or investing, you're going to have institutional investors in it as well. They aren't dumb. They're going to see, oh, 5 times my value if I stake it. Well, I'm staking it. Forget this junk. And then they'll stake it and they'll earn it. Obviously, if it gets to a certain price, then they can dump. But again, guys, we're going to have a massive supply shortage, in my opinion. And what causes with a massive supply shortage and excess demand? Price pump. No one's even talking. I mean, sure, we're starting to get some little hints on the news media, but and for crying out loud, they spell Ethereum wrong. So it's kind of like, okay, they still don't understand. I mean, they're making fun of Dogecoin. I mean, they don't. I mean, Doge, yes, it's a meme. I understand making fun of it and whatnot, but it's one of those things that first they laugh at you, then they argue with you, then they jump on board. So we're getting to the laughing stages, maybe. I mean, they were laughing at NFTs, guys. Oh, that's another thing. NFTs, forgot to mention that one, not just DeFi. So here's a map cycle of what the 2017 e-cycle looked like. So this is plotting the same chart onto a relative price chart, so a different price. Obviously, different prices. So minimum 5K, maximum 27K. Massive range, but is it under that? Yeah, it's under that right now. So we'll see what happens, obviously. But you guys can see, back in 2017, massive pumpage. Look at this. Pump. And this is what we're looking at right now. Steady stream. Maybe we might get a retrace and be able to buy some cheaper ETH. But look, still got room. This is just, it reminds me of like the Bitcoin halving. So this is why it's called the triple halving, guys, because we're going to have people staking. Now we're going to have locked in DeFi. Bitcoin's not locked in DeFi. I mean, sure, you have it locked in like wrap Bitcoin and whatnot. But there's not as much as it could be. And now, so DeFi, NFTs, staking, and now you're getting rid of the miners just dumping on the market. And now you're going to have a supply burning, EIP 1559. That is just, that's a recipe for massive pumpage. The reason I'm explaining this is, guys, you really need to read this article. Yes, it's 79 pages, but guys, it is a really good read. If you guys are still on the board or on the fence and trying to understand Ethereum, this will help you understand Ethereum a little bit better and what the value is. So I'm going to explain this again as well. A lot of this paper is estimating 150K. Crazy prices. I've heard crazy prices as well, and yes, in my opinion, this is a very crazy price as well. But they're explaining the illiquidity drivers. So staking, DeFi locked up, that's at 12% of the market cap. Incentives will bring it to 30%. So incentives to stake and keep it going. Fee burn removes most liquid supply first. So you're automatically going to have a negative in release. So now like your Cash App and your Cash App and Venmo or PayPal, those guys are all buying the supply of Bitcoin coming out. But now if they start buying Ethereum, well, they probably are right now, and there's no supply coming out there, it's actually decreasing and people are pulling their money off the market, well, what are they going to buy? Well, when there's no supply, you have to pay a higher price. That's just how it works. Just look at the lumber shortage. We don't have a shortage. We have an excess. They're holding it on purpose. I mean, it's like, and people are paying crazy prices because they can sell it for that. And then you're going to have the demand drivers with all this illiquidity coming out. Now, well, actually, ETH hodling to go more viral than BTC hodling because now you can earn money on your stake. So instead of just, yeah, throw it in a cold storage, no, it's, hey, lock it up, store it in DeFi, stake it. Now here are the demand drivers, new on-ramps. So you're going to have retail institutional flows, Robinhood, PayPal, Venmo, futures, people who think they missed out on Bitcoin going to Ethereum. Access to Ethereum will be faster. US ETF timing, that's definitely a wild card, is what it's saying in this article. So it's kind of like, dude, massive pumpage. Triple halving event. EIP 1559, proof of stake, 90% reduction in issuance, and is equivalent to 3 consecutive Bitcoin halving events. So the events are staggered by 4 months, so do keep in mind. EIP 1559 is on July 14th. Proof of stake is expected October/November 2021. And then you have the narrative. This is something that's like, oh, the ETH BTC ratio. Sometimes it's one of those things like you see it, you feel it, you believe it, it comes to fruition. So again, we'll reiterate it. DeFi, staking yields. Visa accepts stablecoins, ultrasound store of value, earn interest, NFTs. Use case more intuitive than digital gold. Smart money, not dumb money. Guys, it's, I don't even know. I can't even keep talking about it. It's just the same thing. And a lot of people are like, oh, it's already priced in. Well, how do you price it in? We haven't even had the halving. So we're still getting inflation or inflating supply. We don't even know what it's like. We haven't even done the fee burning. We haven't even done proof of stake. We still have miners dumping. If you guys want to see what miners dump is or what miners dumping is like, well, look at Bitcoin when the miners were selling off. What was that one mining pool called? F2 pool or something like that? But anyways, guys, you remember. And again, guys, this is something to go as a caution. Easy come, easy go. This is very true. Just as it can go up is as quick as it can come down. So do keep that in mind because when there's low supply and guys, people will dump when it goes super high. So be very careful with it. This is just something I'm just trying to explain to you a concept. So here are a couple of risks I do want to go over. This is where it could fail. EIP 1559 or proof of stake doesn't get passed. EIP 1559 and proof of stake gets passed, but there's issues with the upgrade. Proof of stake is delayed more than 2 to 3 months. Transaction fees are too low after scaling for fee burn to have an impact on price. Scaling could fail to reduce fees. Volatility doesn't need to mean upside volatility. If illiquidity is created but Bitcoin peaks before demand can flow into Ethereum, again, everything follows Bitcoin, there will be illiquid outflows. Basically, like if the price of Bitcoin dumps, well, ETH is probably going to dump with it. Ethereum is a risk-on asset and liquidation event can occur. So something like COVID-19, people are going to be like, I'm going to sell it all, just like I explained. Bitcoin major outflows before Ethereum's narrative is adopted. SEC could decide to neither approve the ETF or the ETF doesn't get expected inflows. SEC could approve the ETF before Ethereum becomes illiquid, and geopolitical risk could arise. Ethereum's monetary policy could change towards a more inflationary stance, being that Ethereum is like, we need to go ahead and make it inflationary. The triple halving is already priced in. And the other one is more so just like a risk for not hitting 150. Don't really think that matters as much because still it's massive price pumpage. But again, guys, I'm going to leave you guys with this. First, people were saying Ethereum and Bitcoin can coexist. But in this article, they're saying it cannot coexist. In my opinion, I'm a little bit on the fence on this one, but he does have a point because I explained my flaws in Bitcoin, especially in the future. But I think right now, Bitcoin and Ethereum can coexist. But in the future, when Bitcoin is only surviving on fees, I don't think it's sustainable because, well, who's going to be paying the fees when they realize, I don't like to buy stuff with my digital gold. I just like to let it sit there. But anyways, that's just a side note. So how will fees sustain if you aren't transacting on the network? This is the defense how they cannot coexist. Ethereum is explicitly deciding to become ultrasound money. So why would you get sound money when you can get ultrasound money and earn interest on it? Visa's acceptance of stablecoins on Ethereum's network and used as a unit of account for DeFis and NFTs. It's funny how you don't price DeFi and NFTs in Bitcoin. It's priced in Ethereum. EIP 1559 taking place is arguably catalyst, or I guess you can say catapult, for Ethereum to launch. You guys already saw the ETH on exchanges going down. Again, guys, we aren't going to harp on it much more because we already harped on it like crazy. So we're going to leave you guys with a wisdom one-liner. If I brought any value to you guys, smash up the like, subscribe to the channel, hit that bell notification. That way you guys are notified every time we make a new one. If you think I'm a lunatic, go ahead and leave it in the comments below. Also tell me what you guys had for dinner or lunch or breakfast or brunch if dinner, whatever, breakfast, lunch, dinner. Or, yeah, anyways. Proverbs chapter 29 verses 25. Fear of man will prove to be a snare, but whoever trusts in the Lord is kept safe. Trust in him, bro. That's what you need to do. Thanks for watching, guys. If you guys are new to the channel, go ahead and hit that like and subscribe button and hit that bell notification. That way you guys can be ahead of the game every time we make a new video. I hope you guys enjoyed that video. Guys, I need you guys to do a couple things. Participate in the quadruple threat. First, set up a Celsius account. Here's a referral link. You guys can use it. Write it down. Type it down. Or you guys can use the link in the description below. Set up a Celsius account. Good for savings. Good for earnings. Don't bet the house on it though. But anyways, you guys can get a free bonus on this. Alright, how do I get this free bonus? Well guys, enter in this link. You guys will get $30. Then deposit $200 in any cryptocurrency. Enter in new 40. Like NEW 40 promo code. You guys can use both. And you'll get a total of $70. Guys, that's step one of the triple threat. Alright, Drake, I did step one. What's step two? Alright, guys, this is where you can get your small altcoin gems and little game changers. You guys can go to crypto.com. You can set up an account. Here's a link in the description below, or you guys can just type in this code right here on the screen. Deposit some funds in there. You get $25 in bonus crypto. You guys can use that to buy your altcoin gems and have some fun. Step two of the triple threat, or I'm sorry, quadruple threat. And the third one, this one is a fun one, Voyager. This one is more so where you can buy with limit orders. It doesn't have as many altcoins as crypto.com, but it's really easy to use, easy to set up. And yes, this one does come with a referral link as well, and you'll get $25 in BTC. This is how you can do a limit order. Super easy to use, and they don't charge any trading fees whatsoever. Here's the referral link. You can't copy and paste it, but you can look in the description to copy and paste, and you can put that in and set one up. 25 bucks. Step 4, open up a BLOCKFI account. Here's a link you guys can use. The reference code is 024FFE02. All the links are in the description below. Open up a BLOCKFI, just deposit some funds, and you'll get $30 in BTC. And you can also get that crypto cashback rewards card. Don't forget about that. Game changer, 1.5%. And the first few months, you get a bunch of extra percent. Check it out. This is the funnest one though. Lolly, free. There is a referral link to this one too. I've actually won 100,000 sats one time on one of the taps, which is worth like $100 in Bitcoin. So it's crazy. Look, and there's even proof in the wallet. Look at that, daily stack, 101. Guys, set one up. It's really easy to do. Download a Lolly account and just set it up. And of course, guys, if you guys are a pro, there's a link in the description so you guys can sign up with KuCoin and Binance US to get some trading fee discounts. Thanks.